Now, the stock market has done a big U-turn inside a week, and so to explain why and whether we should put on the seatbelt for another ride higher, we have Marcel von Pfyffer of Arminius Capital. Marcel, great to talk to you, mate.
And you, Peter, how are you?
Very good. Now, I often make you give us the details of what's going on in the outside world, but our stock market done well today. It's reacted to what we've seen on Wall Street. The company results today, very positive. What's your feeling? Are we going higher here, or will that correction come back to bite us?
I think the most recent correction we just experienced the last couple of weeks, Peter, I think you can confidently say that this little tick up has seen the end to that. The news coming that has affected Australia, of course, the banks seem to never ever stop in their ascendancy in this country. But when I start to read overseas publications, reports about saying the quality and the level of how good the banks and the dividends are in this country, that makes you stop and listen and read. But look, quite frankly, again, our stock market is very highly correlated and has been since the GFC with the US stock market. And I think, honestly, in light of the emerging markets turmoil that has seen mid-January, early February, I think what you can actually apportion this little tick upward in the last week or so is really to the good Dr. Janet Yellen, who has taken over control of the Federal Reserve.
Well, I now describe her as the most important person in the world, materially speaking. Would you agree with me?
Yeah, well, materially, I mean, Glenn Stevens gets paid probably a multiple of what Dr. Yellen will get paid. But as we know, the good RBA governor is the highest paid central banker in the world. Look, Yellen gave a testimony last night, Peter, and I think that's pushed Wall Street up significantly as well. And the markets, perhaps you could argue, were expecting it. And the largest thrust to come out of what she said was that only a domestic slowdown will actually influence US monetary policy conditions. So the assembled senators gave her a little bit of curry about what's happening in the emerging markets, and really the criticism that some of the other central bankers from those emerging market economies have thrown at her about what is really happening with a normalising US interest rate. What is she going to do about that? And as I said, her response really was reminiscent of the line of that movie Dodgeball, where Ben Stiller's character says, "Here at Globo Gym, we are the best and we know it." So, you know, her take on the situation, again, to put it into more eloquent parlance, you could talk about what John Connolly, which was Nixon's Secretary of the Treasury, said in 1971, I think it was, to an assembled group of European finance ministers, is that the US dollar is our currency, but your problem. So Janet Yellen has quite specifically said that she is going to keep an eye. I know that she said they did nominate 6.5% in the US unemployment rate as that little tweaking level where they'll stop and take notice and perhaps reassess the rate of how quickly they raise interest rates. But what she said last night really has said that even if the unemployment rate hovers around or below 6.5% and possibly lower, there is no chance that she's going to be raising interest rates in America anytime soon.
I've got to say that film you mentioned has never made my top 10 films, but I will check it out on the weekend. It seems as though it's so profoundly relevant to the market. Was it Ben Stiller, you said? Okay, I'll look into that one. All right, Marcel, I don't often put you on the spot in terms of the local market, but I know you have an opinion on most things in the world. I felt as though I was like literally on a dirt box early in the year when I was tipping the market might go to 6,000, but a lot more people in my program are making me feel a bit confident about. I think we've got Macquarie at 5,900, Shane Oliver's at 5,800. Is this possible? Could we actually see 6,000 this year on the Australian stock market?
Of course we could. We could see any number, Peter. Again, just to go back to a US equivalent, when Alan Greenspan delivered his irrational exuberant speak in 1996, and the Schiller Cape measure and all of the market valuation metrics suggested that things were very, very expensive, the market then just took off for another number of years, 25% per annum plus on top of that. So, yeah, look, of course the market could see 6,000 points. I think RBA Governor Glenn Stevens' comments last week in the minutes of the RBA monetary policy meeting, saying that, well, the insinuation that perhaps that the loosening of Australian interest rates had ended. I'm not quite sure what he was doing saying that, and of course the Aussie dollar has rallied significantly, 2-3 cents off the back of that. But I can't really see how Stevens is going to raise interest rates at any time through calendar 2014, and perhaps, as far as I'm concerned, that's me putting my neck out there rather than saying the Australian stock market will hit 6,000 points. Of course, if Glenn Stevens keeps rates where they are and most definitely doesn't raise rates, and again, you look at the unemployment data in this country, what's happening with Toyota, the manufacturing sector, thanks to Glenn Stevens' comments, the Aussie dollar is going up again. I really think that there is very little chance of interest rates going up, which of course, as we said many times last year in the program, Peter, if interest rates stay low or don't move anywhere, then of course money is going to leave the bond market and go to the stock market.
Well, I've got to say to you, like Paul Keating would say, we're on a unity ticket on that particular assessment. Before I bid you farewell or au revoir in your case, Europe's looking better, but you're the man who looks at Europe closer than most. What's the real story?
Look, Europe is definitely looking better. What the OECD, the latest numbers that they've popped out is that, and again, this is in aggregate, right? So this is across the European area, which is those countries who trade on the euro currency. It looks like by the end of calendar 2014, they will actually get their budget deficits as a proportion of GDP down to about negative 2.5% of GDP, which finally will actually come in under what the Maastricht Treaty actually stipulates that those countries always should come under. So, notwithstanding that, so they're actually improving their budget deficit positions. Unemployment, Peter, in average across the European area is still 12.1%. Gross government debt to GDP, again on average, is still 107% of GDP. So the austerity packages, I'm afraid, do need to continue. And just to finish on one very interesting point that the German Constitutional Court actually brought down its ruling on Mario Draghi and the ECB's open market transactions, which is the ECB stepping into the bond market as being the buyer of last resort. The German Constitutional Bank this week actually said that as far as the Germans were concerned, OMTs, or the practice of OMT, is actually illegal from a German perspective, but it's up to the ECB to determine. So they've done a real Pontius Pilate. And they've said, as far as we're concerned, we don't like it, but this is the ECB's ball game and they can do what they want. So again, that will give the markets a certain degree of solace. The Draghi's line of whatever it takes, as far as Brussels is concerned, will continue to stand in 2014.
Thank you, Marcel. I will sleep better as a consequence of that.
Brilliant.
All right, mate. We'll see you later. After the break, is Australia's relationship with our biggest neighbour going backwards? We'll pick the brain of an Indonesian expert, Ross Taylor, after the break.